Welcome to Plus TV. Today we have Angelo Robles from the Family Office Association. I'm here in his office in Greenwich, Connecticut, and Angelo, thank you for sitting down with us at Plus TV.
A pleasure, Greg.
Can you introduce yourself and your organization for us?
Sure. FOA is a global membership organization dedicated to single-family offices. We're based here in Greenwich, Connecticut. I launched FOA in late 2008, and I've been very fortunate that we've grown so quickly around the world to have well over 200 members being single-family offices. I would kind of look at us, we don't advise or consult. We're strictly a private club and kind of an observer of the secretive world, I guess you could say, of single-family offices.
Talk about your organization and why you started the Family Office Association in 2008.
I believed all along, even looking back prior to creating FOA, that there would be more than an opportunity to build a global forum, an opportunity for families, again, the principals and the SFO executives to get together selectively with thought leaders in the industry and have a chance to have a discussion in a private and safe setting. And I think that's been critical to FOA. We're very low key, we're under the radar by the very nature of our single family offices and families. That's become critical to who we are. And what started initially very low key here in good old Greenwich, Connecticut, with a limited number of families looking to find the value in peer-to-peer connectivity, in listening to global thought leaders, and learning and sharing among each other, we've been very fortunate. Early on in FOA, through a variety of circumstances, we got some pretty significant figures in finance. John Paulson, Nassim Taleb, Mark Lazary, Bill Ackman were some of the early kind of keynotes and presenters at FOA, and I think that gave, especially coming off 2008, that gave tremendous insights in the markets and just really believing in the vision of bringing the families together, building something private and low-key, and an opportunity for them to really have significant dialogue internally. You would think that, how come they can't necessarily do this on their own? The nature of single-family offices, for the most part, is they're all on an island, which means they're kind of isolated. They may have their small network of other like-minded families or professionals, but if you could build something that was private, that gained their trust, and more importantly, provided value, I felt all along that would be something that would grow significantly. And looking back now, which is right about almost to this day, about 4 years, I've been very fortunate that FOA has grown so significantly among families, of course, here in Greater Greenwich in New York, but nationally and around the world as well.
What have been the observable shifts in family offices and their perspectives since 2008?
Sure, Greg. And there's a saying in the family office community, you know one single family office, you know one, because they are so different. I mean, there relatively is a finite number of them. And the level of research that's out there, even with a group like ours that has a significant number, it still is representative of a small sample per se. And they are so individualistic. That being said, of course, we're going to have, from an observer's perspective, our opinion relative to single-family offices and trends and kind of an investment perspective. Broadly speaking, I would say there's two different types of single-family offices. Most of them would fall into what I would call allocators, where they're looking to allocate in terms of to outside managers, whether long only or whether multiple strategies from long and short, hedge funds, private equity, venture capital broadly. There are some, usually maybe a little bit more, certainly larger, that see the value in building out the right team. It takes longer, it takes more money. Maybe in many ways it's even more complicated. But there certainly are significant families here in America and around the world that do see value in kind of keeping it all internal, including many, if not all, of the investment decisions that they make. So I would say in terms of trends, we're seeing an increase in the quality and the level of talent in single-family offices, whether it's more from an allocation perspective or whether it's more from building internal teams and direct investment people. So that's been a trend that we've been seeing. American families, I think, have been a little bit late to the game of investing more broadly and globally. I think that's been something that has been increasing recently over the last year or so, realizing that not all the opportunities are going to be limited to here in the United States, but certainly opportunities in LATAM and Asia, in Europe, really anywhere around the world. I think families are more broad-based in their perspective from a global perspective in investing.
So where are family offices being created? Are there geographic trends, or are they coming from financial communities? Talk about where they're being created and why.
Wherever there's families of significant wealth, and we all define that differently, there's going to be an attraction to creating a single family office. It gives you control, privacy, and customization that there's no other vehicle out there. A private bank and an MFO, all providing some level of value, but the ultimate for someone who is incredibly successful, again, we all define that differently, is going to be to create, and has been for hundreds of years, their own single-family office. We've been seeing a trend lately in the significant wealth that's being created in Asia. But those families, even more private than most other families around the world, are even more on an island and separated. And having kind of a best practices and other families to talk to, even more from an operational perspective, is sorely lacking. So the quality of the infrastructure and the thought process behind creating the SFO, I think, is lacking somewhat relative from the Asian perspective. Broadly speaking, here in America and around the world, where is a lot of money coming from? It's coming from people that have been very successful in finance. So you have people, the Wall Street tycoons, more in my backyard, the big hedge fund managers, the incredibly successful traders that either as managers or directly working with those managers, private equity managers. In the left coast here in America, you have the tech entrepreneurs and the super angels and the venture capitalists. You have a lot of the wonderful families that have been in finance around the world. So those are areas where hundreds, maybe thousands of qualified people, what these people bring to the table is they're incredibly bright and intelligent. They're very confident, good or bad, relative to their capabilities. And they're the type that probably, and again, they're all snowflakes, they're all going to be different, that may take charge of the investment mandate more hands-on. I mean, we've heard all the stories lately about all these gigantic hedge fund managers, the legends in the industry, maybe more so here in America, that are kind of closing down the fund, and they're billion to $15 billion kind of creating their own single-family office. And understandably so. Now, that may be sourcing managers, it may be seeding other managers, but they're very hands-on in the process. Another trend that we see, especially among those type of families that take a very hands-on approach to their investing, is how about all the other issues other than investing? A family office is more than just an investment vehicle, whether traditional or alternative. There's so many other factors, operational, taxes, more global issues and perspectives, a family legacy, and philanthropy. So we find that a lot of those type of people that feel they got the investment aspect covered, but they really need to get a hold in a private way of the aggregation of their assets, the analytics behind the reporting, so they can make smarter and quicker decisions. And in today's world, that matters. The opportunities to understand their cash flow. Maybe for the average person, I mean, what's the big deal? But when you're worth that kind of money, $1 billion or multiple billions of dollars, and have multiple family members trust operating companies, it's very complex. And what sounds simplistic to us, but getting a hold of their finances, their cash flow, and aggregation of their assets, and having that timely and the information reported the way that they want it, is specifically important to that crowd.
So how are family offices viewing hedge funds in particular?
As we all know, single-family offices have been the early movers and shakers in hedge funds going back decades, since there first was hedge funds. They always had a chance to look at opportunities for alpha and look for really, really bright people. So that certainly has been a hallmark of the single-family office community. Heading into today's world, where a lot of people expect our markets short and midterm to potentially be very, very challenging, I think they do look for very talented people, people that have their own skin in the game, and they also look for people that can really hedge or protect against downside risk. That's been a buzzword, as it should be in single-family offices. It should have been post-2008, but that certainly was a wake-up call for many. So many families, whether internally or through outsourcing, are strategically looking to hedge their risk, and that somewhat means knowing what they own, which the issue of transparency is always going to be a challenge, and families like to get it where they could for a variety of reasons, and one reason is to properly hedge a part of their portfolio to protect against significant market losses, which are very difficult to recover from. Now, families are also different than institutions. They don't have some of the tax advantages that many institutions have. I also feel, and there's a feeling in the industry, that many institutions, and I'll be careful how I phrase this, but they could play it safe. They're very trusting in consultancies. I could argue whether there's a level of conflict associated with all of that. But here in America, we would say maybe there's safety in picking big blue. I think single-family offices could be much more nimble. They could invest in smaller funds. They could invest in strategies that are a little bit more unique, but may tie into their portfolio. So overly broad in my comment, but I would say many single-family offices like emerging managers. They like strategies, an overused term, but that are uncorrelated. Mineral rights. Used airplane parts, life settlements. I could go on. And again, we could maybe debate whether they're truly uncorrelated or not comparative to equities. But I think that's what families are looking for. Now, there's other advantages. A smaller manager could be more nimble, is perhaps hungrier. Family offices could demand more favorable terms, liquidity and transparency, and also the ever-present fees, the traditional fee structure. So I think family offices are smarter investors than they were a couple of years ago. I think they're more careful, but I also think they look at it as an opportunity. So that's been, from my perspective, an insight as to how single-family offices are investing in hedge funds. We see a little bit of a return to the roots, I guess you could say, and going back prior to when financial people were the movers and shakers in creating single-family offices, but it was more the industrial giants and families building real operating companies. We see a little bit of a resurgence among more modern families being, I guess you could say, maybe a little bit less interested in public equities and more taking an operating interest and sometimes controlling in more direct companies.
Angelo, many of our readers and viewers are interested in gaining the attention of family offices. How do they go about doing this, given the extremely private nature of family offices?
That's a tough question, and one that there's not necessarily an easy answer to. In some ways, the families are in the driver's seat. They already have enough wealth to often last for multiple generations, and you're the one looking to provide services to them. That being said, reversing the tables a little bit, I don't know any family from a couple of $100 million to billions of dollars in US or Forbes 10 families that don't use a significant number of outside services. And that's even if they have an SFO, like I briefly discussed earlier, that really keeps things more internal. But you need external accounting and legal to some degree. Even if you do a lot internally, you're going to need some level of external investments, oversight to some degree. And how about issues pertaining to philanthropy and teaching the next generation? I mean, so there's always going to be services that many in your audience have value, that are going to be of value to the families. As an other benefit, I would say that broadly speaking, newer family offices being created today are a little bit more transparent. They're efficient, they're more technology proficient, they're a little bit younger in their family dynamics as well as the executives, and they know that maintaining a network from their college relationships, to their prior employment relationships, to those that have been trusted advisors in the past, is still going to be very, very valuable to them. So if you provide a service that could be very much defined to single-family offices, not generically high net worth, not institutions, although you may be able to do that too, but relative to your specific marketing and your approach, there would be an opportunity to be attractive, so to speak, to single-family offices. All that being said, even if you have the skill set and the services being offered, how do you get to them? Single-family offices are the most private of all the big investors from an institutional and personal investor in the world. There's not a list per se that you could buy. There's not as many conferences that you could go to. Real single-family offices often don't go broadly to national or global conferences per se. That's a big misnomer. I'm not saying some don't, but it's much more private. They want to control, one, they're very private by nature. They're very going to be demanding on quality, so they want an intimate setting. You can't be short-sighted in the single-family office world or look for the short-term solution. It takes a commitment. It takes a commitment in terms of specifically your services being narrowly defined to single-family offices, and then having, to some degree, a marketing approach that is going to get the word out there. I think you have to be a little bit more patient. And this is where, again, it's a little different than the institutional investor. It's more of, do I like the person? Do I trust them? That's very important. In institutional world, it's a little bit more black and white. In a single-family office world, it's multiple shades of gray. That being said, the decision makers in the family, whether it's the family principal, the key executive, or if it's a board, which some families have, they can move much faster than many institutions could.
Talk about the structure and organization of a family office.
Here in America, I'll let you know a trend is certainly for families to create their own private trust company, which creates a lot of unique opportunities for them on the privacy and control aspect. Broadly speaking, around the world, there's various counterparts to that. There's some families that create their own banking entities that provides a certain level of benefits as well. And many American or international families, besides having a core, and again, I'll stick initially with the U.S., besides having a core U.S. operating company, they'll have a private trust company. They might even set up an offshore captive insurer. And they might even, if they're large enough and have more global interest, set up different LLCs and operating companies totally outside of U.S. jurisdictions. And those same guidelines broadly apply to families really anywhere in the world. Other aspects that pertain to more the operational or structuring issues in a family office, besides what I noted, many families start with either a revocable or an irrevocable trust, and the trustees in that trust make a decision to move forward with the single family office, creating operating companies from there. But where do you domicile? A word we would use here in America. There's various states that provide better benefits. And again, globally, there's various jurisdictions as well that are going to be beneficial, whether it's to U.S. or to international families. Those are definitely issues to discuss with a competent person who's experienced broadly on family office matters from a legal and an accounting perspective, but now more than ever in today's broadly regulatory environment, and also just how families are, when you get a big family and there's money involved, lawsuits come into play. So who's a trustee and who has a fiduciary responsibility? You want to get that right. I think I'd rather spend time getting it right early than having to tweak that and adjust that later when it may be too late. As I noted earlier, in 2008, a lot of families got caught blindsided. Some of them lost as much as broadly the markets lost, 30, 40% or more. That caused a lot of families to look more internally. Some of them questioning whether a single family office was for them. As much as we're an advocate of SFOs, it's not for every family. It is not something that you set up and ignore. Actually, if that's your purpose, then probably a single family office is not for you. It's much more It creates many benefits, but it's much more, especially initially, but really continually, a hands-on initiative. We also have to look at the other issues, and that relates to, are private banks a better option? Maybe for some families, or maybe in conjunction working with their SFOs. But are global banking institutions not without conflict? Not without limitations or things that are going to be challenging for them? Are more multi-family offices the right mix? For some families, the answer is yes, or maybe as a complement to what they're doing. But again, I would perhaps question a global financial perspective of many such firms, and simply, if they're even dealing with two families, that's not just you. So having your own SFO, it's all yours. It's 24/7. There is no other vehicle that's going to give you that, but you have to make sure that it's going to be for you. So I would say post-2008, families, I think, learned a lot. I think they're more careful in terms of knowing what they own and hedging their risk. Yet that being said, sometimes wanting the best of both worlds, in a challenging environment, they're also looking to grow their assets. If you're a family that's a couple of generations deep and has multiple trust and family principles, 50 or 100 of them, pulling on the family assets, getting by at just break even after taxes and inflation is going to cause a dwindling of the family assets, especially if there's a big market turmoil, even with some level of hedging. So that creates all sorts of, now we're going into family dynamics. Are there some branches of the family that want you to play it safe? Are there some that want you to be more aggressive in your investing? Are they all chipping in to paying for the cost of the SFO? What kind of fiduciary responsibility and liability do the SFO executive directors and the trustees and the family council and people that help make the decision on an SFO? So it often becomes a challenge to many families, usually a little bit more in terms of what they're doing in their SFO, is often not as much the financial. It's the family strife and conflicts that create significant challenges, lawsuits, and other problems. I think there's families of wealth both here in America and around the world, and I think they're always going to look at the opportunities for privacy, control, and customization. And the only one vehicle that really is going to cover that internally on a 24/7 basis for themselves is going to be their own single-family office. A comment I would make on that, and perhaps a parting comment, is I do think that, of course, the challenge is going to be hiring the right talent. Whether you're looking to build it more internally or hiring more of an overseer or the right allocators, there is a tremendous amount of talent that I think would like the opportunity to work directly with a family. But I think families also have to be a little bit more encompassing and creative relative to their compensation. If you really want to hire best in breed, you have to pay or compensate best in breed. Definitely tiering in performance or benchmarks relative to the compensation, but I do see families a little slower than I would probably like, but moving in that direction of hiring the best in breed.